Nigeria's equities markets closed in the red for the sixth consecutive week as the all-share index shed 0.8% last week to extend the year-to-date loss to 11.6%. Pabina Yinkere, head of research at Vertiva Capital Management, joins me right now for an outlook on the equities market. Thank you so much for joining us, Pabina.
Thanks for having me.
Well, I guess it's old news asking, how would you say the market fared? I mean, we just kept hearing the 6 days of consecutive loss, 7 days of consecutive loss. That's just like, what we kept hearing all through last week. But what do you see playing out this week? Do you see investors displaying what many describe as an active, opportunistic buying tendencies this week?
I think we'll see a little bit of that. But I think the overall negative market sentiment may overwhelm any bargains that may be out there at the moment. If you look at the market since October, the market has really lost quite a bit. And if I try to trace this around, I think some of it may be tied to the outcome of the U.S. elections and optimism that the U.S. economy will be more buoyant under Donald Trump, and which raises the likelihood of seeing Fed rate hikes. And of course, Nigeria's FX policy, which continues to shadow what you would term as a dirty float in that sense, are some of the factors, and the overall negative economic outlook are some of the factors that led to the significant decline in the market since then. Those factors haven't changed today. Likelihood that the Fed will begin to raise rates in December is still strong, and this may begin to attract a lot of flow out of frontier and emerging markets into the U.S. I think the residual foreign investments that had been in this market had to leave. Some of those could have been the reason why the market has been under that pressure. So going into this week, I don't think anything will change significantly. Really? So
you don't even foresee some kind of mixed sentiments persisting this week?
A little bit of it, because I think some stocks are looking at as good bargains at the moment. But I think that overall negative sentiments may just neutralize whatever effect that would have on the market.
Now, taking a look at stocks, of course, with good bargains, we saw investors displayed improved risk appetite, particularly with the financial services, conglomerates, and consumer goods sectors. What sectors do you see emerging as investors toast this week?
Okay. I think if you look at the market over the past week, the oil and gas sector has been under a lot of pressure, particularly from FO and even Total as well. Fundamentally, those companies, in my view, are pretty good, decent companies. So at some point, people would begin to realize that they present bargains at the moment. So I would tip the oil and gas sector to reverse fortunes this week.
Interesting. Now, how would you rate the level of optimism in the market? You've actually talked about, of course, the losses we have seen so far, and the fact that things might really, maybe not change much this week. But do you see any hope of things picking up? We did see a break on Wednesday last week. I call that a flash in the pan, really, because then the losses, did continue, all through the week. But then, just as we wind up until the end of the month, what do you see playing out? Do you see any uptake anywhere?
It's when I look at the overall market, it's difficult to see, because I begin to ask myself, what's going to drive that uptick? If anything, the negative headwinds sort of like persist. If you look at the budget, we are beginning to have some concerns there. The kind of political events that played out into the delay of the 2016 budget is beginning to play out again in the 2017 budget. So those kind of things doesn't give investors any optimism going into the end of the year. Traditionally in this market, we've usually had the what you call the Santa rally, the year-end rally, but I think the overwhelming negative economic outlook would cap any last-minute rallies you would see in the market this year.
Interesting. And just on a final question, Ion, of course, the NSE organized an essay competition last week and was aimed at addressing financial literacy and understanding of the markets. Now, how much do you think a proper understanding of the markets can actually contribute to the recovery of the capital market and even the economy?
Investor education is good. It's always a good thing. It's something we at Vertiva have been advocating for, particularly when you begin to see that beyond the traditional equities or your bonds, people are getting the understanding of diverse sort of products. For example, when we look at ETFs, even we launched our ETF a year ago, our first ETF a year ago, and up until this point, there is still that depth in understanding what an ETF really is. So I think financial inclusion, financial education is something we'll continue to pursue at Vetiva, and it's something we'll continue to recommend that the NSE does. If that happens, it can help the retail investor base to sort of like understand market dynamics, and I think overall that will be good for how the market performs going forward. Interesting.
Well, you're going to be with us to the end of the show. We're going to have more to talk about. I've been talking to Pabina Yinkere, Head of Research at Vetiva Capital Management.